Welcome to another episode of Get Started Investing, a podcast where we answer all of your money and investing questions. If you've just joined us for the first time, a massive welcome to the show. My name is Bryce, and today, as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Very excited for this episode. We're answering a question that I guess we've brushed over in the years of doing Equity Mates and Get Started Investing. And we got this question from Emily from Sydney, and it made us realize that we should probably pause, go back, and answer it. So the question is, who the hell is Betashares, Vanguard, and iShares, and how do I buy ETFs?
Nice. Well, thank you for the question, Emily. So let's start with the first part of the question, which is who the hell is Betashares, Vanguard, and iShares?
Yeah, that's the part that we realized we'd probably skipped over because they appear a lot.
They do.
They are everywhere and they're confusing because in our financial lives, we've never run into them before.
Yeah, and I think we fall afoul of thinking that they are now household names.
No.
They're certainly not household names.
Maybe in your household.
Yes. So basically, they are ETF providers who offer a wide range of exchange-traded funds. That is its most basic answer.
And really, an ETF is just a way that we all pool our money together and then we go and invest in whatever the ETF holds together as a group. So Betashares, Vanguard, iShares are some of the bigger names, but there's a whole lot of ETF providers out there. And what they do is they take money from investors, be they the biggest investors in the world, like super funds and pension funds, or tiny investors like us, and then they take our money, pull it together into an ETF, and then go and invest in whatever they say they're investing in. It could be stocks, it could be property, it could be bonds, it could be infrastructure, it could be gold, it could be anything these days. Even crypto now, there are ETFs. And so essentially they're the middleman that pulls our money and invests on our behalf.
Let's specifically go through the three that Emily called out, and they happen to be the three big players globally, but also here in Australia. So we'll start with iShares, which is a global ETF provider, the largest ETF provider in the world with about $3 trillion in assets under management, a whopping figure. So iShares is a subsidiary of BlackRock, the biggest asset manager in the world. And iShares offer a wide range of ETFs across multiple markets and asset classes.
Yeah, if you think iShares $3 trillion under management is a lot, BlackRock as a parent company has $10.6 trillion under management. These are massive financial institutions. Some of the more popular ETFs that iShares offer here in Australia, the iShares Core ASX 200 ETF, IOZ is the ticker, and the iShares Core S&P 500 ETF, IVV is the ticker.
So moving on to Vanguard, another global ETF provider, perhaps the better known ETF provider, at least when I started, that was the company or brand that kept popping up when I was researching. Second largest provider of ETFs in the world, just shy of $3 trillion, $2.7 trillion. They are known for the ultra low cost index ETF that make up parts of our core portfolios. Founded by a guy called John Bogle in 1975, and have a reputation of putting us as investors first.
Yeah, some of the more popular Vanguard ETFs here in Australia are VAS, which is Vanguard Australian Shares, and then VDHG, which is Vanguard Diversified High Growth ETF.
And then to close out is Betashares. Now, they're an Australian ETF provider. They have $37 billion assets under management, founded in 2009, and have a wide range of index and also active and thematic ETFs. Again, make up parts of our core portfolio, and I know a lot of the Equity Mates community also use Betashares for their portfolios.
Yeah, now a couple of the most popular ones here in the Equity Mates community, Betashares Australian Shares ETF A200, Betashares NASDAQ 100 ETF NDQ, which tracks some of the biggest US tech stocks amongst other names.
So those are the big three. You may also come across here in Australia Global X or VanEck, again, but all offering different types of ETFs depending on what you're looking for. And there are a whole raft of small companies as well and active managers that offer ETFs.
So that's who they are. The question is, what do you need to know about them and what they offer? And I think the starting point for a lot of ETF providers is they offer access to similar indexes or asset classes. And it matters who the ETF provider is, but it matters more what they're offering you access to. Now let's take the overall Australian stock market or the biggest stocks in Australia as an example. Vanguard have VAS, which offers you access to the 300 biggest Aussie stocks. Betashares and iShares both have an ASX 200 ETF that offer you access to the 200 biggest Aussie stocks. All three of those providers, all three of those products are pretty similar. So it's an important thing to just know that you often have a lot of choice when it comes to ETFs, and a lot of those choices are pretty similar.
Yeah. So using those examples that Ren just spoke about, the ASX 200, the main difference between the providers is actually the management fee that you're going to pay. So if we look at iShares ASX 200 ETF, you're going to pay 0.05% per annum. Betashares A200, exactly the same underlying index, is 0.04%. And then there's the Vanguard Australian ETF or VAS. It's 0.07%. Now it does have a little bit more in it than the other two, but similarly the same underlying index.
If you're wondering what those percentages are, 0.05% is 5 cents for every $100 invested, 0.04 is 4 cents for every $100, and 0.07% is 7 cents for every $100 invested. So there are differences, but they're all tiny in the context of your investment options out there.
So other than management fees, ETF providers try to differentiate themselves by providing access to thematic and active ETFs. So what we mean by thematic ETFs are ETFs that are constructed to give you access to big macro investing themes. Think cybersecurity, think robotics, think AI and semiconductors. These are big investing themes that are playing out, and these ETF providers go out and try and create ETFs that are relevant and give you exposure to these thematics.
The active ETF trend is a trend that's really emerged over the last couple of years based on the success of these big ETF providers and the amount of money that they've been able to, have invested with them. And so these days we're seeing more and more ETF issuers come to market. And these might be a little bit more familiar names for people who have been investing for a while. Names like JP Morgan and Fidelity are introducing active ETFs to the market. Now, when they're issuing ETFs, they're playing the same role that Vanguard, iShares, and Betashares are doing. They're taking money from some of the biggest investors in the world and some of the smallest investors in the world, pulling it into this ETF and then investing in whatever they said they're going to invest in. Often it might be an actively managed investment fund. So there are more and more ETF providers than ever before, but the important thing to keep in mind is that they're all really playing the same role. And what matters for you as an investor is well, first of all, is the ETF provider big and stable and they're going to be secure with my money? But once you tick that off, it's then what am I actually investing in?
So that is a high-level who's who in the zoo of the ETF industry here in Australia. Plenty more overseas, but for now we've focused on Australia. How do I buy an ETF? We recognize it might be a bit confusing, but let me tell you, by the end of this, you're going to see just how easy it is.
Now, the good news is that buying an ETF is similar to buying a stock. So if you've bought an individual stock before through a broker, it's a similar process. If you haven't bought a stock before through a broker, well, this is how you buy an ETF. It's also how you buy a stock. We're going to walk you through it. And if you're watching on YouTube, we're actually screen recording our laptops, so we'll actually step you through the process. But Bryce, you've added a little wrinkle to this.
Yeah. I just want to show just how straightforward it is. So I've set up a bit of an online shopping challenge here. at Equity Mates HQ, we're low on some supplies.
Yes.
We need some paper hand towels. Our producer Sophie needs some soy milk.
Yeah, she's requested six
soy milk. We need some post-it notes, at least 2 sizes and various colors, and some garbage bags. So what we're going to do is, while I'm showing you how to invest in ETFs through my broker Stake, Ren, you're going to jump on Amazon and try and fulfill this order. And what we hopefully see is, by the end of it, buying ETFs is no more difficult than the experience that Ren went through buying on Amazon, because we all know how to do online shopping.
Yeah. All right. Well, let's get into it.
All right, let's see how we go. We're audio guys here, by the way, so this whole video thing, we'll see how it goes.
People don't need a blow-by-blow of me buying on Amazon. I think most people are used to that. So you just check in with me when you want.
All right, so I'm heading to my brokerage platform, Stake, and doing the usual login.
While you're logging in, let me just say, Amazon are now trying to get you to subscribe rather than just buy things one time for hand towels. So a little sneaky from there.
Long Amazon. Oh, now I need to just do my 2-factor authentication. This is good security. I'm glad this is secure for my broker.
All right. Well, while I'm ripping ahead of Bryce, so I'm just going to quickly ask our producer, what brand of soy milk do you want?
I mean, if Bonsoy's on the table.
Bonzo!
All right. Yeah, it's on the table.
That's good. It's good. All right, I'm in. So before you get started, a couple of things that you absolutely need to buy an ETF. A, you need money in your brokerage account, and B, you need to know what ETF you're going to buy. Just like on Amazon, and Ren is doing right now, he's doing a search. So I'm going to search for the iShares S&P 500 ETF, which the ticker is IVV. In the search bar, you can see that I type it in, and I have the option to literally just click on IVV. That takes me to the page where there's all the information I need to know about the ETF. It tells me the name, so I can just check that off. Yes, it's the iShares S&P 500. It tells me the current price of the ETF, $560, and it gives me some performance information. I can see last 5-year performance, 1 year, 6 month. You can see that I can manipulate that. Big green button on the right-hand side, buy IVV. Yes, I want to do that. Now I'm going to go for a market order. Now what this means is that I don't really mind what price I buy it at. I'm going to let the market decide. When it comes to buying ETFs and dollar cost averaging, you just want to be doing market orders, because I don't mind if I buy it at $5.60, $5.63. I'm just going to let the market decide. So I click market. I have about $1,000 to put towards this. So I'm going to say I want 1 share, and it's going to spit out that I have it's going to cost me $564. Then I go review, place order, and I'm done. It is that simple. Ren, how'd you go?
I have finished, but not that much quicker than you, while you were putting in the quantity that you wanted. So pretty similar time. I just didn't want to interrupt your flow there.
Thank you. I think the point here is that you can see that there's really 3 simple steps to this. It's the search and finding the ETF. Now, I searched by the ticker code, which was IVV. You can actually search by thematic. You can search by the provider that we spoke about. So if I search iShares, you'll get a whole list of iShares ETFs that come up that you can search for. Secondly, you just want to make sure that you have the money in your account that matches, I guess, the value that you want to be investing in. And then you can just either invest by units, which I did, which was 1 unit, or you can invest by dollar amount. So I could have typed in that I wanted to buy $500 worth, and it's as easy as that.
So look, I think the concluding thought, and especially if you were listening on audio and we didn't narrate it that well, the point that we want to get across is buying an ETF or buying shares these days is much like online shopping. You go to the platform, you log in, you search what you want to buy, and then you add to cart, or you buy now, you put how much you want to buy in, and then you buy it. And that it really has never been easier to buy an ETF or to buy shares generally. So if you think it's too hard and you don't want to get started, just remind yourself, if you've bought something on Amazon ever before, you've basically done the process. But rather than buying stuff, invest in shares.
Nice. And you're coming tomorrow, I think.
Yeah, well, here's
Same-day delivery.
Here's an even better wrinkle. Amazon, pretty good. They'll deliver their stuff tomorrow. The shares you'll get immediately.
Yes.
Wow.
Well,
Almost
depending on
immediately.
market open,
Yeah.
yes. But we'll leave that for another episode. Thank you, Emily, for the question. If you're listening on the podcast, as Ren said, we have done this in video format on our YouTube channel, so make sure you go and check that out. And if you'd like to ask us a question, head to equitymates.com/contact. If you're an avid listener, a massive thank you. If you could just share this with any mates who are starting their investing journey and rate and review, that would be much appreciated. It genuinely helps us reach more people. And you can also watch on YouTube, as we said. But thank you for supporting us. As always, Ren, we'll pick it up next episode.
Sounds good.